So great. So we've had a few last-minute changes for the panel, but we're going to make this as interesting as we possibly can for us, because we've made the time and effort, and we're sure that you'll appreciate that as well. Just a quick question for the audience. Do we have any insurers in the room? Do you want to come and join us? Okay, that's good, because in actual fact, a lot of people don't realise, actually insurance is traditionally known as the laggard, the slow adopter of technology, you know, the ones who always follow. But I do a lot of stuff in the blockchain space, and I've actually discovered that some of the major blockchain projects that have gone live are actually in the insurance industry. So all of you can now start learning about what insurance companies are up to and what insurers are doing around innovation, disruption, and emerging technology. So what we're going to do, I'll just go along the panel, ask them to introduce themselves, just a couple of minutes each about who they are, what they do. And if we can start with the lady at the end, Pollyanna, please.
Thank you very much, Gary. Pollyanna Dean. I head the corporate insurance practice at Simmons & Simmons. I work with a number of Insuretech startups and also more established Insuretechs. I find it an absolutely fascinating world. And as I said to Gary, I never have any problem getting any of my assistants to get involved because they're so excited by it.
Good afternoon, everybody. My name is Will Thorne, and I head up ventures for SCOR Global PNC in EMEA and for what we call specialty businesses, so non-consumer businesses. I also lead a business unit which is dedicated to forming strategic partnerships with Insuretechs, and so we work kind of with really exciting entrepreneurs all around the world. And SCOR, for those of you who don't know, is the fourth largest reinsurer in the world, so we're the in-house innovation and ventures unit of one of the largest incumbents.
Hi, I'm Manjit. I'm MD for the insurance sector for Rainmaking. And for those of you who probably haven't heard of Rainmaking, but you may have heard of Startup Bootcamp. So that's one of our divisions. Out of the two divisions are corporate innovation, where we industrialize innovation across large corporates. And I think the most interesting part of what we're doing at the moment is our ventures business, which is where large corporates come to us and ask us to create a business that will disrupt their core business. So we're doing that for a number of major brands. So that's...
Does this work? It does work, yeah. Hi, I'm I'm Nick Pester. I'm the head of insurance and Insuretech at Capital Law. My background is as an insurance lawyer, and then realised, a couple of years ago, the way that the market was going, and thought that Insuretech looked particularly interesting. So we've had that going for about 2.5 years now, and we work with a number of Insuretechs, both in this country and abroad, helping them to not only launch their products, but also connect into the traditional market, connect into finance, kind of support them commercially as well as legally.
Okay, so I think pretty much everybody there mentioned the word innovation at some point, and insurance, and hearing innovation and insurance together. It's quite a rare thing at times, so it's good to hear we've got panelists on there. I just to start, Pollyanna, with Simmons & Simmons, you've actually been doing quite interesting stuff with startups in terms of providing facilities now. Is that right, what we were saying just before? Could you just explain a bit more?
We offer a startup Fintech fund where one of our partners, Angus McLean, who went off to Barclays on secondment, got involved in their Techstar startup program, came back to the firm and said we could do something similar. We offer about £25,000 worth of free legal advice to 4 startups each year. There are a few requirements of them, but the fund enables people who have, certainly in the financial world, heavy regulatory burdens, difficult questions to answer, and it gives them access to lawyers in the area at no cost. The interesting thing is that very first year, Angus is not an insurance specialist, didn't know anything about insurance, and chose Cover as the first Insuretech startup for the fund. And every year, I said to Gary, every year we've had at least one Insuretech startup in that fund, and every year it has been the Insuretech startup that has done the best.
Will, if we could just carry on from that, really, because I know your previous experience in a previous life, working for an insurance company, now you're doing more the VC side of things, really. How are you seeing the changes with insurance companies innovating with this and raising funding?
Yeah, I think it's a great question. If I go back to when we first started setting up innovation and venturing at SCOR, it was in around early 2016. And at the time, almost all the startups we were seeing were going after the last mile. So they were looking at how can we innovate in distribution, how can we change the way that the customer experiences insurance. I think what we've seen over the last 2.5 years is this progression, firstly towards kind of more around the product development, and even some people setting up what we call full stack carriers, so managing their own balance sheets and trying to have more of the value chain under their auspices. And then even more lately, we started to see fundamental innovation, so changes to actual product. And that for us is almost the most interesting, because you can do a certain amount of innovation around distribution, but then as we've seen, I think, in some of the banking side, there's a normalization, so people catch up. Whereas as you start to make fundamental changes to product, that's actually arguably more defensible.
And I guess as well, if you change the product, so you've got like IoT devices, you've got a move in insurance towards insurance on demand, where you're no longer paying an annual premium and this kind of thing. What's that change the capital requirements? Has anyone got any thoughts on that? Because I used to be involved in Solvency II, where you're having to work out annual capital adequacy in that.
Well, I'm probably not going to bore the crowd with going into the vagaries of Solvency II. Yep. But what I would say is we don't look at on-demand insurance as people who are buying simply episodic insurance, so just taking out insurance for 20 days and then stopping. Actually, what we've seen is a lot of people try that, and then the model hasn't necessarily worked in all cases because, as a millennial consumer, actually what I want is ease of purchase and certainty and trust and all of that good stuff. What we have found is that people who want to make episodic changes to their insurance, that there is fundamental demand there. And so I think that the difference there is you might have changes, kind of more fluctuations in exposure and premium on an annual basis, but it's still captured from a capital modelling point of view in almost the same way.
Mm-hmm. Okay. Manjit, just building on that really, because you do a lot of stuff with the startup community, and as you say, with rainmaking and startup bootcamp, where I used to be a mentor. What's the startups' perspective about this? Do they get the difference with insurance?
I think the newer startups definitely do get it because they're coming from a different perspective. So we're no longer seeing pure startups that come like kids out of universities, basically. We're seeing lots of startups from people that are semi-retiring out of insurance companies, so they have a lot of in-depth knowledge about the market. And just picking up on Will's point there about that on-demand type insurance. So I think the industry was really scared that a lot of these young startups were going to disrupt that market. Mm-hmm. That's not really what we're seeing. What we're seeing is a lot of the adjacent industry players getting into that space. So the likes of BMW now looking at starting to do journey-by-journey insurance, as opposed to taking an annual policy. Alarm companies saying we already have all the sensors in your home, so why can't we tell you when a particular item moves out of the house? Mm-hmm. Because they're already geared up to that. They already have the relationship with the customer. They have the brands. They have the money. They have the technology. So we're starting to see a lot more disruption, if you describe it as that, coming from those major players who are extending their brands into the insurance space, as opposed to the startups trying to do it.
Okay. And Nick, I see you nodding your head there in support. Can you think of any examples that way you're saying that?
The motor market is a very good example, I think, but I completely agree with what Manjit is saying, and I think actually the wider trend is, for me, I don't think that the challenge to insurers, traditional insurers, actually is coming so much from startups per se anymore. It's coming from the wider capital markets who are starting to realise, as Will alludes to, that actually you can use funding as balance sheet capital rather than actually just day-to-day operations. So I would expect to see a lot more full stack startups over the next sort of 6 to 12 months, or scale-ups probably more accurately, and secondly retailers, because I think it's indicative of a trend which is happening already, which is that actually retailers are, as Manjit says, because they know their customers much better, and frankly they're better at the kind of customer management front end side of things, they're kind of thinking, well why don't we just do it ourselves? And I think the nature of the insurance product is changing along with it, as we were talking about at the break, from one of primarily indemnity to risk management, ancillary kind of support to a risk management product, helping people manage their risk and their lifestyles and having that safety blanket underneath if they need it.
So earlier on today, we had a panel, a breakout type thing at lunchtime, talking about Facebook and Libra coin and the impact on the banking sector. Is there going to be a big technology play, the likes of Amazon? I know they're not already beginning to provide insurance, where a technology company will move into insurance in some way. Pollyanna, you were.
Yes, it's really quite interesting at the moment because the CII has published a paper in the last 6 months talking about the issues with the potential for Amazon, Facebook and so on to move into the market. And those tech titans are seen as being the future. And effectively, the CII paper was delivering a massive kick up the backside to the insurance industry, saying, fundamentally, if you don't get your acts together, you will just be seen as a cash bucket. And everybody else will have the relationships. You all go on. I don't know if, as only one person put their hand up to say they worked in the insurance sector, I can tell you that the mantra for the insurance sector is a constant, it's a relationship business. Well, as soon as, it's not going to be very, very shortly. And unless they actually leverage those relationships, they're just going to be the cash cow. And that's not a very attractive position, and it won't lead to the profits that they are used to making and wish to continue making.
Well, actually, if I could just add one thing, a whole host of startups who are coming to us for funding or for partnerships, their business models are predicated on this B2B distribution and the idea that they're in a better place to distribute through some of the kind of alphabet companies and the major tech companies. I think what's really interesting is, one, competition for B2B relationships for B2B2C or B2B2B distribution has never been higher, and incumbents are competing for it as well. And two, the slight concern at the back of our minds as we look at the long-term viability of these businesses is what happened in the travel insurance market. So 20 years ago, insurers went to British Airways and said, we're going to give you some ancillary revenue, we'll be your travel insurer of choice, and you get X% of the income. And life was good and everyone was very happy. Unfortunately, because you are sharing the data, everyone starts to really fundamentally understand the value of that relationship. And we are at a point now where, last year, for instance, Allianz paid a huge sum of money to become the preferred supplier of pet insurance to pets at home. And my thought at the back of my head for some of this stuff is, okay, if you're going to do a deal with, for instance, the major provider of online travel agency software in Germany, do you end up in a position where when it comes to refresh that contract, it's actually becoming pay to play? And then it's a bidding war around the fungibility of capital, exactly as Pollyanna said.
So where does that take us with... Oh, sorry, go on, Manchester.
So the question about whether a major technology player is going to get into the insurance market. So we're actually creating an insurance business for a major technology player whose name's been mentioned already. Okay. So it is happening.
And I was just going to quickly add in terms of, we've got the additional conundrum now of regulation. And, insurance is a global thing. And, you got the whole regulatory oversight and legal changes and that. How are startups managing to understand what the regulatory complexities are?
I think the main issue that we see is the lag between development teams and the compliance functions within those businesses. They're used to doing things very quickly, startups, tech startups in particular, and they don't always understand that there are certain kind of hurdles that have to be overcome. I think that's changing slightly. It was a year ago, I would say, that actually there were a lot of people coming into this space that didn't necessarily get the kind of regulatory arbitrage that came with it. But that has changed. I think AI is going to be the main area because, frankly, nobody really knows at the moment exactly how that's going to develop. There's no kind of immediate plans for specific regulation, but I think there will come a point when that will probably change, when AI reaches a certain point. But it's so fluid that regulators and companies alike, I think, are going to find it quite difficult to manage that kind of progress.
Okay, and it's a fair thing as well, because some of the work I do is like a blockchain advisor to startups, and people say, well, what do you advise? What's your role? And say, well, basically, I keep the CEO out of prison. But and I did actually have one project where that they were doing an insurance product, and I said, well, are you regulated? No. Well, is your broker regulated? Well, we don't have a broker. Is your underwriter regulated? We're self-underwriting. It's like, what do you suggest we do? Well, the starting point is stop calling it insurance, and then the regulator will see through that. So you might want to find yourself a insurance provider as an umbrella. But Pollyanna, coming back to you, because if your organisation is providing the support and the funding, does it also provide the legal expertise as well as part of that?
Not in my experience, largely because, of course, the funder, the insurer, has its own issues, and unfortunately that doesn't necessarily mean that they want to also provide the startup with legal advice and so on. So I have found myself very often advising the startups, and it's a difficult situation because, of course, the weight on either side is unequal, and so startups could find themselves being effectively legged over by the incumbent. Now, Will and I sit on a board which has taken the view that actually we put together some documents which were straight down the line, and they are part of the Technation Foundation and therefore the Insuretech board. And on the website there are the documents that we have agreed with startups, incumbents and so on as being standard form documents that startups can use. One of the first things that startups find themselves having to spend that hard-won cash on is often documentation. So we thought that the best thing to do was to try and get something standard out in the market that startups could rely on.
Will, were you going to add something there? Because I noticed you smiling a lot.
Well, nothing to add apart from if I compare kind of the UK regulatory scene to other areas, the amount of support you get in the UK, if anyone in the room is trying to build an Insuretech startup, is fantastic. And you know these documents, a huge amount of work from some fantastic law firms, one of which is on my right-hand side, went into them. So please download them, have a look at them, give feedback, and use them.
And it is probably something, given that this is London Fintech Week, to kind of acknowledge that London, with having the regulator nearby, having the government nearby, having banking nearby, insurers nearby, technology, it is quite a unique environment, really, compared to other countries. And I don't know, Pollyanna, if you have similar
Well,
experience?
I just wanted to mention the FCA sandbox for the startups. Obviously, this is something which various companies go in and start their business and under the aegis of the FCA allow themselves to do some regulated activities. Now, the interesting thing is, of course, that the sandbox has been seen as being a good thing, taken forward by a number of Far Eastern jurisdictions and so on. But one thing that is interesting to me is the rather plaintive view of the PRA that there are no real insurance startups. In a way, startups today are tweaking the existing model. The FCA has got quite a lot of what I would call brokers or distribution companies under its wing, but it's the PRA that really wants to see a new way of doing insurance, and that, I think, is the next step.
Okay, we've got less than a minute left, so I was quickly going to ask for any closing comments from each person, and in the spirit of Twitter, if you could do it in 140 words or less. Okay, yeah, if we have any questions for the audience, that matter, because I'm getting lights shining in me, I can't see any hands going up or anything, but any questions? No? In that case, any closing thoughts? Nick, go on, you've gone for it.
Just to say that I think that tipping point in terms of Insuretech and the point in that journey, we're very much now entering, I think, the phase where disruption is starting to happen. And I think that the general insurance market is obviously kind of first in line, if you like. But I also think that the noises that Lloyds have been making recently with the Future of Lloyds prospectus shows that actually the view that it's just going to be confined to the general insurance market, I don't think is true. And I think the next 12 months or so we'll see an acceleration in that disruption that's already happening.
Okay. Manjit?
I think generally the level of innovation is maturing up a lot quicker, and the fact that a lot of the large corporates are looking at some very innovative models. So things like, why can't I turn most of the elements of my insurance policy off when it's sat in Heathrow Airport, or my car sat in Heathrow Airport? I think that's quite interesting because those large brands can create those propositions, but I'm not sure our regulators are thinking creatively enough, because the customer definitely wants that kind of stuff. So I think we really have to be a little bit more flexible, and we're starting to see some very, very creative solutions coming out of some of the Insuretech community as well.
That's great. And just quickly before we go on with Will, one of the suggestions I've been making for the Innovation Sandbox is maybe the regulators need their own sandbox to start innovating their regulation. Sorry, Will.
I mean, really, just as it's London Fintech Week, You know, London has a almost unique concentration of insurance capital, venture capital, talent, expertise, good regulators, good backstop from things like the Tech Nation Initiative and the Insuretech UK proposition. And what is slightly frustrating for our side as a potential funder and partner is, although London has a huge amount of seed stage insurtechs, firstly, not many have managed to kind of bridge the gap between seed and then later rounds. They've not managed to hit that traction. And secondly, despite the fact that London is the home of specialty insurance, so insurance for the difficult and the weird and the wonderful, we tend to find that we see more startups in that space setting up in Europe or the US. So really, it's just a cry for help in a way. If you kind of come across that that kind of opportunity, or you can see something which can be done using insurance in an unusual way, it's on the incumbents, on the VC scene, and on the CVC scene, really to support that and help it grow and develop. So I'd love to talk to you about that.
All I would say is the area is as fast-moving as it's diverse. The law is constantly having to run to catch up in this area, and regulation too. Sometimes I would say it can be a little disheartening to think that people haven't actually thought through your wonderful idea. But the truth is, we're all out there, we're all trying to help.
So I'm conscious of time. I was just going to offer the final thing really on...
Gary, maybe you could
sorry,
take the slide
a question
before you
sorry.
finish. You've got a question.
A question with who? Post-Brexit, do you think the Insuretech startup movement will survive? Who'd like to take that one?
I'd say, why not? Why shouldn't it survive?
I don't think it will survive.
You don't?
I think it'll thrive.
Yes.
Because I actually think Brexit, in some ways, people keep thinking of it in terms of it's the UK leaving the EU. If we start thinking of it as the UK joining the rest of the world, that's quite a big opportunity. And if we look at what's going on in Asia, in particular in the emerging markets, I think it provides some great opportunities. Manju, you're going to...
Yeah, so I was going to say, if you look at models like Lacquer, for instance, so the proposition they created in the UK, now because accidentally it is Sharia compliant and CARFL compliant, that they're now launching out in Asia, and they've got investment from AirAsia. That probably wouldn't have happened under normal circumstances, but they didn't create it deliberately for that. But all of a sudden, it's opened up the whole Asian market for them just because that model just happens to work.
Yep. And it's an interesting thing as well, that a lot of the focus today around technologies, in particular we're hearing about AI and blockchain. Blockchain, everyone's talking about decentralization, and decentralization is the new normal. And then we keep talking about London, which is pretty central. So, okay. In that case, if we can close at this point, if the audience could just join me in thanking the panel for their time and